Well, I think everybody's concerned about the future simply because they don't know what the future looks like, and they've probably got less certainty on their market views than they've had for several years. So, but I think the start to the year has been it's super interesting, and it's an environment in which our clients need our help more than ever. So it's been a pretty interesting month.
The lack of clarity, the opacity going forward, again, clearly helping the volatility, clearly helping trading revenues as well. But is there a point when there is too much volatility where actually the investors, the underlying investors rather than traders, are losing too much money, and that is a negative thing for this market?
Well, I think we might already be past the point where there's too much volatility. But volatility with uncertainty is very different to volatility where we at least understand what the outcomes are going to be. So, I think that, the uncertainty is far more damaging than the volatility.
Given how much uncertainty there still is hanging over markets, are you concerned about complacency? When you look at the market moves, we've recovered from the troughs of April, and actually U.S. markets are not in bad shape. The DAX has erased all of its losses since April 2nd. Is there a degree of complacency out there?
So that's a great question. I think if you look at what's happened to U.S. markets, if you go back to sort of where we were at the beginning of the year, I'm sure a lot of you were doing segments around Davos that was talking about U.S. exceptionalism, that was extremely focused on the upside of AI, that was incredibly bearish about Europe at the time. I think that what's really interesting to my mind was I did an interview then where I said, well, I sort of share some of the optimism around the business-friendly policies that this administration has been advocating, although we haven't yet seen that many of them. But I don't really understand the optimism around markets because they're very well priced. And so in my mind, it's very hard to say that if you look at how well-priced US equities were, how concentrated that appreciation had been, the reality that equity markets don't do sort of 20% plus moves up for sort of 2 years in a row very often. It was hard for me to really understand where people saw all of the upside. And in fact, it looked like those markets were ready for some form of correction. So for those markets to be 5, 6, 7% down doesn't seem that unreasonable. So you can argue that there's that very little has actually been priced in. Clearly, the tariffs were the trigger for a move, but underlyingly, the markets were pretty highly valued.
How are markets valued now, 5, 6% down, given we still don't have a deal between the U.S. and China, and we don't know if we're going to get anywhere with the other countries after the 90 days are up? So would you still be bearish on the market here? Is there still, too much optimism being priced in?
So I think the way we would describe it is that, we're probably in the eye of the storm rather than out of the storm. The question is, how long does the eye of the storm last? And clearly, given that we have this 90-day pause, one suspects that the 90-day pause is probably going to be one of the things that delineates what the eye of the storm would look like. But absolutely, if there isn't a better resolution than we were seeing before this pause, then you would imagine that markets could suffer further.